What if the broker you trust today gets vaporized the moment the AI bubble finally cracks? Right now, 7 mega-cap tech names make up almost a third of the entire S&P 500, and trillions in passive money are riding on that narrow bet. When concentration gets that extreme, history says the unwind is never quiet, and Forex traders almost always feel it first through their broker. Here is the part most reviews skip. When equity markets gap violently, prime brokers tighten credit lines to retail-facing FX brokers within hours. That means lower leverage, wider spreads, and stop hunts that look like glitches but are actually liquidity vanishing. EURUSD can move 40 pips in a single tick. XAUUSD can gap $50 over a Sunday open, and your beautifully placed stop loss can feel 30, 40, even 100 points worse than the level you set. That is not a conspiracy. That is just how a B-book or hybrid broker behaves when their hedge counterparty refuses to quote. So how do you actually rate a Forex broker for crash conditions in 2026? First, check who their liquidity providers are. If the website only says, "Trust us," that is your answer. Second, look at their slippage and execution statistics, ideally published monthly. Real ECM brokers publish them, most do not. Third, read the fine print on negative balance protection. Some brokers only offer it to EU and UK clients, and the small print can exclude gap events caused by extreme volatility. Fourth, check capitalization and regulator. A broker with thin capital under a weak offshore license is exactly the broker that quietly disappears the Monday after a tech-led crash. Fifth, and this one is overlooked, test withdrawals before you need them. Process a small one this week. If it takes more than 2 business days when markets are calm, imagine the queue when everybody panics at once. The AI trade has been the most crowded position in markets for 2 years. It does not have to crash this month, but the concentration risk is real. The tech sector is priced for perfection, and Forex brokers are the plumbing that traders only inspect after it bursts. Build your shortlist now, while spreads are tight and execution looks clean. Because the next time S&P futures lock limit down in the Asian session, the difference between a regulated, well-capitalized broker and a flashy offshore one will be the difference between a manageable drawdown and a blown account. Drop the name of your current broker in the comments, and I will rate it for crash readiness in the next video.